$73 billion. Gone. No war, no natural disaster, no market crash, just one idea. The Metaverse. Mark Zuckerberg said this was the future of the internet. A digital world, work, friends, money, all inside a headset. Instead, it became one of the most expensive bets in corporate history. Tonight, we're auditing it. Where the money went, why it failed, and the moment Wall Street stopped believing. This didn't start as a joke or a meme. It started as panic. In 2021, Facebook had a problem. Growth was slowing. Young users were leaving. Apple had just nuked Facebook's ad tracking. Billions in ad revenue vanished overnight. Zuckerberg needed a new story, a big one, something investors couldn't ignore. So he renamed the company. Facebook became Meta. Not because the Metaverse was ready, but because Facebook wasn't. This was a reset button, a moonshot, and Wall Street bought it. At first, Meta told investors this was the next computing platform, like mobile, like the internet. If you missed Google, if you missed Apple, if you missed Amazon, this was your second chance. And that fear drove everything. Inside Meta, a division called Reality Labs became the money pit. This is where the Metaverse lived, and where the cash went to die. In 2021, Reality Labs lost $10 billion. In 2022, another $13 billion. In 2023, billions more. By 2024, total losses crossed $73 billion. That's not R&D. That's incineration. Meta said they were building the future. Employees saw something else. Clunky software. Empty virtual rooms. Avatars with no legs. Internally, even Meta admitted most users didn't come back after 1 month. Some internal docs showed Horizon Worlds had fewer active users than a mid-sized Discord server. This was supposed to replace the internet. Here's the core problem. Zuckerberg built a metaverse no one asked for. Gamers already had better worlds. Businesses didn't want meetings in VR. Normal people didn't want a headset after work. The product wasn't early. It was unwanted. And yet Meta doubled down. More headsets, more ads, more spending. Even as usage stagnated. Because admitting failure would crash the stock. Listen closely to Meta earnings calls from this period. Analysts kept asking the same question. When does this pay off? Zuckerberg kept giving the same answer. Long term. No timeline. No metrics. No accountability. Just faith. Then Wall Street snapped. In 2022, Meta stock collapsed over 70%. Hundreds of billions in market value erased. Not because of ads, not because of TikTok. Because investors stopped believing the Metaverse story. Reality followed. Mass layoffs. Over 20,000 employees cut. Entire teams dissolved. Projects quietly canceled. The Metaverse didn't die publicly. It was slowly buried. Meta still sells VR headsets. But notice the shift. No more bold promises. No future of humanity. No grand speeches. Now, it's fitness apps, games, productivity tools. The vision shrank because the money ran out. And this is the pattern. Zuckerberg doesn't pivot early. He commits, overcommits, and only retreats when forced. Facebook, Instagram, now the Metaverse. This time, the bill was historic. To put $73 billion in perspective, that's more than NASA's annual budget. More than Disney spent acquiring Marvel, Lucasfilm, and Pixar combined. Spent on a world where no one showed up. So, where did the money go? Servers, custom chips, headsets sold at a loss, massive hiring, marketing, and years of executive tunnel vision. This wasn't fraud. It was something worse. Hubris. Zuckerberg truly believed he was right, that the world would follow. But markets don't reward belief. They reward results. And the metaverse delivered none. Today, Meta is quietly moving on. AI is the new buzzword, the new promise, the new distraction. The metaverse isn't canceled, it's ignored. Which is worse. $73 billion. Burned, chasing a future that arrived and found the door closed. Subscribe to know more.